All right, all right. Well, good morning, Helene. Good morning. Looks like we got the room opened up
Morning.
here, and some people are piling in here. So excited to be here for today's TOD live session.
Same
You
here.
know, my goodness, I know I kind of alluded to it this weekend in my Periscope newsletter that I wrote, but my gosh, it's never a quiet week in the stock market,
No.
but some are a little more busier than others, and holy smokes, is this week one of those? I mean, between all the earnings we have going on. We have a Fed meeting, and of course, Fed decision, press conference after from Chair Powell. There's a lot of different interesting things, kind of angles to talk about that from. Uh, you know, we have a GDP report coming out tomorrow. We have a PCE report on Thursday. We have a non-farm payrolls report coming out on Friday. I mean, like, any normal week, any one of those single things would be enough for the market to be kind of anxious and looking forward to. But it's like almost like kind of drinking from a fire hose,
Oh yeah.
uh, with everything going on this week. So definitely a lot of market moving events on the calendar this week. So, what are your thoughts about how to try and navigate some of these?
Yeah, I know we try to just tune out the noise as much as possible, that's for sure, and just rely on those technical indicators to find those great setups, regardless of what the overall market is doing, whether it's overheated or bottoming out and a decline. We just rely on those technicals to find those best opportunities, no matter what's going on. So, uh, definitely aware of what's going on in the market and staying up to date, but trying to not, you know, pay too much attention to it at the same time.
Exactly. Yeah. And, like from our position too, as a trader here, working on the optioneering team, putting that trader hat on, I think you hit the nail on the head there. That's the real key is that to be aware, be cognizant of what's
Yeah.
going on, know that these market moving events are there, but, knowing they're completely out of your control and you have no idea how they're going to come in or what the market's reaction is going to be. Sometimes you can have a bit of a surprising market reaction, maybe not exactly, maybe it's a little counterintuitive. So, that's the real key. Like you said, relying on the charts, looking at the technicals, not coming in with, some idea, preconceived notion of what you think is going to happen, but
Hmm.
just what's actually showing up on the charts and letting the charts speak to you and, going from there. And so that's exactly what we're going to try and do today, folks, to go ahead and try and navigate through all of the chop, all the noise. Obviously, this is a huge week for financial media, to be skywriting about, so many of these events going on. It's a lot. Obviously, they can
Yeah.
be market moving. But again, like we said, we're going to be looking at the charts, seeing what they're telling us. And Helene, here's our first chart for the day. We always like to start these calls off looking at a chart of the S&P 500 just to get a nice top-down index level view of stocks before we kind of start unpacking, really what else we're seeing in the market. And, one thing, Helene, that really stands out here to me is, of course, we all know we've been in a great bull market over the last couple months.
Yep.
We're, I think, near 30% off of the April lows, possibly even a little more than that now. But we have a great trend intact. We have all the major trend lines, short term, long term, medium term, whichever you want to look at. They're all lined up perfectly, having really nice trend line buy signal still intact. So still seeing these really strong bullish trends. But of late we started to get back into that overbought territory, and I think we've seen that really for just about the last trading week, like the last five trading sessions. We've
Hmm.
spent a lot of that time, very clearly in overbought territory after, just previously spending a lot of time there, not too long before that. So, all in this area here, we were, slowly kind of grinding out those highs, day after day, but really not moving, all that much, but just, kind of just floating in overbought territory. And, we kind of gotten back in that position today. That's of course you can see with the index trading outside of the upper Keltner channel, for several consecutive sessions here. You can see these five sessions right here where that's the case. And, of course, it's being reciprocated down here below. So, Helena, it looks like stocks might be trying to finally cool off today. There's a couple other things in this chart here, but do you think it looks like maybe some of this upside movement may be starting to fizzle out a little bit in the short term?
Yeah, that's exactly what I'm thinking here, Blane. I mean, I think people are broadly feeling this way too. You're starting to hear it more when people are talking about the market. that, we have been overheated. We had this amazing rally off of those April lows, and then we went into a really favorable time for the market, especially like the summer tends to be a pretty strong period. But we're hitting the end of that typical seasonality. We're heading into a rockier period of time. August, September, October, these tend to be volatile times in the market. It doesn't mean it has to be, but oftentimes it is. And we've been riding this high for such a long time. It feels like the market's looking for a reason to sell off. And, as we said, it's overbought. Everything is priced to perfection at this point. It would just take, in my opinion, probably one bad headline and things are going to pull back.
Exactly. Yeah. When you kind of get, price perfection, which, it certainly seems like a lot of stocks have been, in this run up to the, current day. The index certainly is, having hit a new intraday all-time high again earlier this morning before pulling back. When you get into those kind of price for perfection, following a really massive run, things have to really truly deliver big time. We're also going to get punished. And I think we've seen a lot of examples of that thus far through earnings season. While a lot of earnings expectations have been really dialed in and, lowered coming into the reporting season, so they kind of set a low bar. With that in mind, about a little over 80% of companies have beat the earnings expectations thus far. So that's been pretty good, even though we still have a long way to go through earnings season. But one thing that has been notable is a lot of the stocks that have, either been just roughly just kind of in line or actually reported a miss, man, they have gotten clobbered. And you just saw another example of that just today. Through this massive run up we've seen, some of the really strong, standout stocks, take like the Netflix or the Spotify's, both of those, as soon as they reported results, man, the markets just beat them down big time. I mean, last I checked, Spotify was down 10% today.
Huge.
And it was an okay report, but they missed on like one line item in their ad revenue, and the stock was down 10% today. So that's kind of the risk of seeing stocks run up 25, 30% into an earnings report, and if they don't deliver exact perfection, that's kind of what we're seeing right now, is that they're starting to get punished pretty big time. So you're starting to see some of those really, really strong leaders from the first half of the year. Some of them are kind of starting to take it on the chin a little bit if they don't deliver exactly every single thing to the T that the markets are looking for. And another thing I'm seeing today too, Helene, before we move on from this chart right here, is if you look at just today's bar, of course, there's a lot of trading to go. We're only about halfway through the trading day. But it's not a super wide bar. It's not super tall. But if it were to currently close at the current level, we would have a pretty clear, to me, bearish engulfing pattern on today's bar. You can see, and if folks, if you're unfamiliar with what that term is, it's a technical pattern. It's looking to identify an individual bar in relation to the previous day's bar. So what we're looking at is this one right here.
Zoom in just a little bit.
Yeah, sure. It might help if I zoom in just to say maybe a 1 month. Might be able to see it. So
that's better.
We're looking at this bar, folks, in relation to the previous day's bar, which is this one. So when you have a bearish engulfing bar, what that is meaning is that the high of today and the low of today's bar are lower and higher. So they're outside both into the range of yesterday. So you can see we had a fairly tight range yesterday. Here's the high and the low. Now, today's range was outside to the upside and outside to the downside. And the bearish part of the engulfing bar comes in if you have a close lower. Okay, so if you get a lower close and you get that engulfing bar, that's a pretty reliable bearish bar. It generally is a signal that you're about to have a reversal in stocks, at least a short-term reversal, counter trend move. So, we've been trading up, but today we got this. As it currently stands, again, there's a lot of trading left in today. There's, things certainly could change, but if left where they currently are, this would signal a pretty clear reversal candle. Of course, you need to see confirmation tomorrow by getting another lower close that would confirm the reversal. But this could be an early indication that, the index level could be starting to pull back yet again. It's been in that overbought territory. We've been hitting new highs at a pretty unrelenting pace. So this could be an
Yeah.
early sign of that, Helene.
Yeah, I totally agree. And when you just see them run since April, I mean, it's been amazing. But in any bull run, there are healthy corrections along the way, and it's hard to look at that and think that we're not going to have one sooner than later.
Exactly. And just to, point out one further thing before we move on, Helene, I remember, about a month or month and a half back, I actually posted in our Telegram channel when I saw the inverse of this signal. It was right before we rallied and ripped up to new highs,
Hmm.
but it was this bar right here because this was when we had a bullish engulfing
Yes.
candle, and I saw this. It was clear as day to me at the close of the market. I was like, oh man, this is a huge signal right here. We got this bullish engulfing candle.
Hmm.
And I posted about it, almost immediately in our TradeWins Telegram channel, sent it out to all the current members in there. They saw that and I said, hey, this is a really clear signal. Look for confirmation tomorrow, but this could be a really early indication that we're about to break higher. And you can see exactly what happened after that. I mean, how many highs did we
Oh
hit
yeah.
right after that signal happened? So, it's a pretty typically reliable signal to spot. And so we're starting to see that set up on the charts again today. So certainly something to keep your eye on and be mindful of. But anything else you want to say about this chart, Helene, before we move on to the next one?
No, I think we covered it all, Blane.
Perfect. Well, Helene, I'll let you go ahead and take over on this one right here. Just kind of tell us and tell all the viewers at home kind of what we're seeing and why we're looking at this chart. It's not one we would typically look at, but what's going on here?
Yeah, sure. So ARKK is ARK Innovation ETF. And this, is full of pretty high flying speculative stocks. So when we are seeing a lot of risk on in the market and a lot of bullish sentiment, we see this stock really take off. And it is indicative of that like really strong bullish rally, which is exactly what we saw coming off of those April lows. We saw a lot of bullish sentiment in the market. We saw a lot of money push into ARK Innovation and these high flying stocks, a lot of times like almost meme like stocks. They have a great idea, they get a lot of talk online on social media, and then they really start popping. Well, we're bringing this up today because it's important to note that we're starting to see a decline in ARK Innovation. We're well off of those highs. We were at around 79 earlier in the month, and now we're down to 74. We're seeing a pullback and a decline. We're seeing some lower lows there in this stock. And that can also be a signal that we are seeing a cooling down for this hyper bullish sentiment in the market. Is that what you're seeing here, Blane?
Exactly right. Yeah, you couldn't have said it any better. Some of the things, and I kind of pointed out this on a session with John last week that I did one of the eye openers. But I said that there's certainly been some kind of silly things going on in the market of late. Seeing some of the kind of meme stock rallies,
Yeah.
and I specifically talked about the open door. That of course everybody was that was the new soup du jour meme stock. So that that was the one that everybody wanted to talk about the last couple of weeks, and like, oh look, the shorts are getting crushed. Open doors rallying, and to the moon and all that fun stuff, right? So we're seeing some of those meme stocks starting to crop back up in the last couple of weeks, and I saw Krispy Kreme donuts was up
Yes.
10% one day last week, and I was like, I didn't, I don't care if the hot light's on, I'm not bidding Krispy Kreme donut stock up 10%, but seeing, we saw some things like that, but all that to say is that this week, it looks like we're starting to see a substantial reversal
Hmm.
possibly get underway in a lot of those stocks. A lot of errors come out of those. Some of those stocks again were down 9, 10% earlier today, and that's why we're looking at just specifically this ETF. Like as you said, it's not specifically that we're looking to trade this for any reason, but it's more of just a sentiment indicator,
Hmm.
seeing that kind of that speculative fervor, that just irrational exuberance behind a lot of those really low quality names that this ETF is typically indicative of and trades alongside. We're starting to see some of that speculative fervor start to really cool down from that simmer and almost start to reverse. I mean, you see the ARKK, it's down nearly 3% today. It's a little off the lows, but clearly the momentum has stalled out in the last week. It's starting to make a short-term lower low. Certainly, based on the closing price, if it were to close where it currently is, that would be a substantial short-term lower low. That's a big move down off of those recent highs. So, just one trend we're starting to notice there. But anything else you want to point out, Helene, before we hop into our trades we're talking about for today?
I guess I just wanted to note that, even though we're pointing out all of these signs of a pullback and reversal, all the long-term trends are still confirming a bullish trend for the market, and for SPY, S&P 500. So, we're not saying that we are going to crash and burn from here, but we are saying that we are overdue for some sort of pullback in the short term, which once again, as we've noted before, is part of a healthy bullish trend and bullish run.
Exactly.
It happens. We get corrective periods on the way up. We can't just go straight up. It's just not how it works. We have to take profits. We get some pullback, we get negative news, and then we go ahead and climb back up again. So overall, still very bullish, but just seeing these signs of a short-term pullback.
Exactly right. Yep. As you mentioned, long-term trends still very firmly intact. The overall trend is still very, very solid there and very encouraging, but just, due for that pullback. And with that in mind, there's also, several support levels, that could quickly start coming in play, once we start to get that pullback. So, if we start to see that begin to materialize more so, we'll probably start to cover that maybe later this week, maybe in Thursday's session. So make sure to join us for that one. But with that, I think now would be a good time to go ahead and hop into our trades. Helene, do you want me to do mine first?
Sure, go for it.
Awesome. Well, let me go ahead and hop into it. And folks, this is my trade for today. So it's VST. It's Vistra Energy. And I know we're right in the heart of earnings season right now, and this stock actually has not reported yet. They're actually set to report next week. So the trade I'm actually going to pair with this is going to be relatively shorter term. It's going to be a little different than what we normally do, but it's a little bit different trade idea. Probably going to be looking to get out of the trade before that earnings report comes out. But with
Fair.
that said, looking at this trade right here. You can clearly see VST has been on just a rip-roaring rally higher, along with much of the market over the past couple of months. It has really been an outperformer. If you were to overlay a relative strength chart comparing this to the S&P 500, you would clearly see VST has been outperforming the S&P for much of the past couple of months. So, great relative strength in this chart right here. The technical trend lines are lining up. We can see our 21-day EMA, our red line right here, is trading well above our green line down here. You can see that is when the bullish crossover happened in early May. And of course, you can see the current stock price. It's currently trading about $195 per share. That's above both of those EMA lines. So that's, additional bullish technical signal there for VST. Now, I also have my Keltner channels overlaid on this chart too. So you can see there, the two blue lines here are upper and lower Keltner bands. You can clearly see the stock is trading within those Keltner bands. It's above the middle channel, but below the upper. So that's right in the exact area I'd be looking to go ahead and, consider taking a trade for this stock, since it's in a nice bullish uptrend. And it's, also not currently signaling that it's technically overbought according to the charts. And that's also being reciprocated down here again too with our RSI chart. This is a shorter term RSI, 5-day RSI. You can see that the number currently is coming in. It's above 50, so that's bullish. That's encouraging. That's signaling that the share price is increasing, but it's still below this level of 70 right here. So that's also signaling that it's not currently overbought at current prices. So it's in a nice nice buy zone down here according to RSI as well. So with that in mind, the stock has had a little bit of chop lately. Even though it is on a very nice, strong, long-term uptrend, has had a bit of a chop. And there's some earnings, still coming up for it, set to report next week. So could be a little more volatile, probably expecting a pretty big move in a stock that's rallied this much. So Helene, the trade that I zeroed in on was actually this one right here. It was a call option debit spread looking at next week's options.
Okay.
Excuse me. And it's actually just slightly in the money. This is not a super deep in the money call debit spread like we more often traditionally have done. This is a little bit different setup. So, it's still a non-directional position like most spreads are, but it's a little more of an aggressive setup. It's a little closer to the money. So you can see I was looking to buy to open the 182.5 and sell to open the 187.5. So you can see at current prices, that's coming in at about 3.1 points per share. So $3 or $310, and so at that current market price, you would have a profit potential of call it $190.
Nice.
So just a quick math on that. I'll haven't had my coffee yet, so let me pull up the quick math for you of what the profit potential would be. That would give the trade a profit potential of just about 61%. Um,
Okay.
so some really nice upside potential there. It does have a little bit of downside protection too, since it is slightly in the money.
I
So
like
I'm
it.
actually going to go ahead and place this trade right here and try and get it filled here on the call and just see how this goes. It's a decently tight bid ask there. So we'll go ahead and submit this right here. Again, we're looking to buy to open at 182.5, and I'm selling to open the 187.5. Again, this is a little bit different type of spread than what we normally do. We'll see if I can get it filled here. But it's a little more aggressive, a little closer to the money. But that was the trade I had for today.
I like it. I like it. As you said, a little bit different, a little bit more aggressive on our non-directionals, but I like it because it's a good middle ground between our traditional deep in the money call option debit spreads and a call option purchase, because it does still give you that downside protection, just less of it, while also giving you a little extra upside. So really great play, really great chart. Love the stock, and has been such a strong performer recently. So I love it.
Thank you so much. Yeah, no, I thought it was an interesting setup, particularly going into earnings,
Yeah.
I thought it was a really unique way to kind of, try and play VST stock heading into those earnings. So, with that in mind, like I said, we'll see if I can get the trade filled. I might have to move that limit price up just a little bit. But, still probably trying to get in on that trade somewhere, as long as I can get in below 3.5 points, that's all I'd be looking to do. So,
Sense.
we'll definitely have to keep up with that one, see how that one turns out.
Well, I'm going to go ahead and jump into my trade now. I'm looking at SMH, so the semiconductor ETF, and looking at the chart, it has just been on a tremendous bullish run. I mean, after that April low when everybody corrected, we started seeing, that bullish run, a series of higher highs and higher lows, new 52-week highs. The ETF is trading consistently above that middle channel and even up consistently above the upper channel. All of these confirm the bullish trend. But additionally, we have a couple of moving averages here. We have the 35-day EMA, as well as that 200-day moving average. So stocks and really powerful bull trends tend to trade above that 35-day EMA. And then also that 200-day moving average, that confirms that longer trend, that longer term trend. So of course, we want to see the 35-day also above that 200-day to confirm the trend again. And we can see that here with the 35-day EMA above that 200-day moving average. So everything is confirming the bull trend for SMH. And then we look at the Keltner channels. As I had noted, SMH has traded consistently above the upper channel. This is a tremendously strong sign for the ETF. And then it dips back into the middle, and then it begins to trade higher. And that's what we're seeing right now in this recent price action. We saw a pullback, a strong pullback to the middle channel, a bounce off of it, and then a break higher. So this is a very bullish sign, but it is a little hot. It's pretty close to the upper channel right now. And so I wanted to do a more conservative play with this. And so I am doing a call option debit spread. I'm doing more of our traditional debit spread, which is further in the money. And I'm looking at the September 5th 270 and 275 strike spread. It's currently at 405, which means you have a $95 profit potential here and a good amount of downside protection, given that we're in earnings season. And things can get a little volatile, and we're heading into that rockier time of the year. So it gives us a great amount of downside protection. The break even would be 274.05. And so looking at the chart, that is going to be all the way down here, right below that lower Keltner channel. So tremendous downside, a more conservative play, and I'm going to go ahead and enter it. So
Yeah, that looks like a great trade, Helene. It's just a touch over a month out too. So, a nice in the money, debit spread. It's pretty deep in the money. A little over a month out. So it looks like a great risk to reward on that one too. I really like it.
Thanks, and we'll see if I get filled. It might take a minute or two, but I went ahead and submitted my order.
Awesome, perfect. Well, yeah, it looks like a great trade there too. So, both of the trades we found today, those two have been, even though one's a semiconductor ETF, one is actually a utility. But oddly enough, the two of those have been trading very much similarly because they're
Yeah.
very much connected both into the AI story right now. Of course, semiconductors have to have those really high powered chips and GPUs to make everything work, but you also have to have on the other end all the energy production and power production in order to get it all working. So both of those have been trading with a lot of AI tailwinds. So two interesting ways to play that AI theme right there. But really like both of those trades.
Same here. Yeah, loved your pick too.
Thank you. Appreciate it. Yeah. Well, Helene, I know we have a handful of folks still in the room here, and we had something that we want to share with everybody. That's been really exciting. We actually just had a couple of profitable trades just closed out yet again today. But folks, if you didn't have a chance to sit down, Chuck and I actually have held two live sessions recently talking about our 4K weekend income challenge. And this has been super exciting for us because it's all based around a brand new groundbreaking strategy that Chuck and our team we created here. It's called our weekend winner strategy. It's a really unique approach. It's totally different than anything that Chuck has ever done before. Any strategy that we have had in any more of our legacy traditional products. It's totally different setup. What it does, it's set up to target entering trades just before the weekend, hold them over the weekend, and then come back Monday or early in the day Tuesday and look to get out of those trades, close them out, and take advantage of some of the dynamics just over the weekend that lead to a high probability and success rate in these trades. Having these trades kind of work on your behalf while the market's closed over the weekend. So it's been a really unique trade strategy. Helene, I mean, of late, we had a handful of beta testers in the group over the past couple months. And the trades were actually hitting at a near 90% win rate. It was actually
Yes.
89.5. So nearly 9 out of every 10 trade alerts that were actually real trade alerts sent out to the members were hitting using this brand new trade strategy. So we actually have the replay of the session that Chuck and I did. And we were actually going to go ahead and play that here. So really would encourage all of you to stick around, so you can have a chance to hear about this. Would really, really love for you to have a chance to hear all about this. So Helene, I'm going to go ahead and log off real quick to go ahead and get that set up.
Okay, great.
And so if you can sign off, I'll go ahead and sign off now. But folks, everybody, thank you so much for being here. Really appreciate you joining us for today's TOD Live. We'll be back Thursday, but I need to go ahead and get that replay set up for you. So Helene, great job, and I'll
Thank
catch you
you.
soon.